What led to the recent drop in the S&P 500? A question that's been circling the minds of many. On Tuesday, the S&P 500 closed lower, dropping by nearly 0.5% to 6,299.19. This drop, it seems, was fueled by a two-pronged attack of tariff concerns and weak economic data. The market responded negatively to stagnant ISM Services Index data, a key indicator of economic growth. President Trump's comments on upcoming tariffs didn't help matters, stirring up an undercurrent of worry and uncertainty. Despite some rays of positivity like Palantir's impressive revenue milestone, the overall market sentiment leaned towards caution. This trend wasn't unique to the S&P 500. The Nasdaq Composite fell by more than 0.5%, and the Dow Jones Industrial Average shed a modest 0.1%. Analysts predict we should brace ourselves for further volatility in the market, with a keen focus on the economic growth outlook and interest rate policies. But it's not all doom and gloom. On the very same day, 34 stocks in the S&P 500 hit new 52-week highs. Individual companies like Ralph Lauren and ON Semiconductor experienced changes in analyst ratings, a signal that the market still holds promise for the discerning investor. HSBC, a banking and financial services giant, has even raised its year-end forecast for the S&P 500. They cite artificial intelligence and policy shifts as driving factors for stock performance, highlighting the ever-evolving nature of our global economy. To summarize, the recent drop in the S&P 500 was influenced by tariff concerns and weak economic data. Despite this, certain stocks showed promise, and HSBC predicts an upward trend driven by technological advances and policy shifts. The market, it seems, remains as dynamic and unpredictable as ever.